Welcome back. Goldman Sachs is ramping up its push into digital assets. The firm expanding trading activity, exploring crypto lending and betting big on tokenization, particularly for treasuries and money market funds, amid a pro-crypto shift under President Trump. I spoke to Goldman's head of digital assets on stage at the Token 2049 conference in Dubai to break down where the bank is placing its bets.
We're also looking at other innovations in terms of product offering as clients become more and more active. And I think that's one of the key things we've seen, just the breadth of clients now eager to get more actively involved in trading the asset class. We're also focused on lending as well. That's something hopefully subject to a variety of different approvals we're looking to build out in the not too distant future as well. So we're very active in that space, secondaries with private equity, etc. The second part of the business is really driven around tokenization and the use for collateral mobility. And I think from a traditional financial perspective, this is one of the biggest opportunities we see. So if you think you've got Donald Trump talking about the crypto capital of the world being the US, what does that fundamentally mean? It means you're probably going to need a 24/7 marketplace. And so as people start to trade beyond the normal market hours, this ability to tokenize treasuries, money market funds, and other asset classes becomes very key as you want to optimize your margin allocation. And then there's just a lot more utility in and around that. So tokenization has been a big focus for us. So as we think about our projects, one of which is in that space, really thinking about utility for institutional use as it just starts to really scale, creates liquidity and sizable marketplaces. We also have developed our own digital asset platform, something that we launched in 2022, recognizing that, there's a number of different players that have platforms.
Really interesting and so much to unpack there, Matthew. I want you to give us a pulse check on where we stand when it comes to the development of this industry and this technology today, because the promise of blockchain and the technology would be that it would disrupt financial services and financial markets. I'm curious to get a sense from you about where we stand. Are we ahead of the curve? Are we behind the curve? Or are we exactly where you thought we would be in 2025?
I mean, it's a really good question, and it depends, when you're asking the question. But when I look back to 2019, really, when I was asked to take over what was a very small business, I could see then the value proposition of distributed ledger technology transforming the way financial plumbing works. And if you think about that, we know the technology works. I don't think there's any dispute there. There's obviously a lot of conjecture around who's got the best technology, but fundamentally, that the technology does work. And so for me, I've probably been a little surprised about the time it's taken, but then actually when you take that step back and you look at the speed with which things have actually moved, it's I would say, probably on track. Regulatory clarity is absolutely key. And particularly in this region, we've obviously seen a lot of clarity over the last year or so. And elsewhere, particularly the US, we're starting to see that increasingly more so. So I think, yes, technology works. We've proved, and there's been lots of different, uses. And now I think it's the scaling that's key, and that needs that regulatory clarity.
And Trump is back. We've seen a big regulatory thaw stateside as well. I actually spoke with Eric Trump on CNBC last night, and I asked him about where we stand today. He said, look, when it comes to the traditional system, the modern financial system and the traditional system is broken. He said, I quote here, it's slow and it's still too expensive. So on that point, where do you see the biggest short-term impact for blockchain in traditional finance, and what is that next wave of disruption going to look like?
Well, I mean, for the US, I think the stablecoin bills that have gone through, the two different houses, I think, will have a pretty profound impact. Many have talked about stablecoins being the killer app, but I think if the regulations allow this to be something that can be easily and efficiently adopted by financial institutions, that's something that you may see, more actively used. So it accelerates the use of digital currency for the big players. And I think that, to me, is something that is super exciting and something we're obviously watching very closely. I think more broadly, there's the market infrastructure bill that's been focused on towards the end of the year. So institutions like us, permissibility is key. So that ability to, be able to potentially trade, or at least use stable coins and then touch the underlying on balance sheet, have that permissibility to do that.
What do you think it's going to mean for financial markets and financial services?
I think it's a really good question, and I think when you think about what is the driver for us investing and spending time, in that part of our business, I think kind of resilience is kind of key. You just look at kind of a lot of the way the markets operate today. There's very strict kind of cut-off times. This ability to actually kind of execute transactions when you need them to happen to the minute, hugely powerful, particularly in the context of intraday. So I think that's kind of resiliency. I also think risk. We've kind of talked. This is kind of key. Risk, when you look at kind of collateral markets, there's a lot of kind of embedded risk that sits in those. This technology allows you to reduce significantly a lot of that. And, that can be through just more seamless allocation of collateral, be that money market fund tokens, for example, or tokenized treasuries. And you can do that with a T+0 pricing. A lot of today's derivatives and other kind of financial instruments are collateralized with products where the pricing is probably T+1, T+2. So you need to hold kind of bigger buffers to obviously kind of manage that risk. This ability to be more seamless with the allocation of collateral becomes very powerful. And then I think the other one is transparency. As we look to kind of looking at the speakers, the next few days, you've got a lot of the buy side, and there's a big focus kind of on, private funds and a whole slew of other different types of funds, and that is super interesting because if you can tokenize and really kind of scale, that marketplace, that really opens up a new investor base and the ability to kind of airdrop data and things. People can all seamlessly get real-time data, which, just isn't as efficient, today in many different markets. And then you can probably see how that can start to be traded more actively.
Indeed. I also wanted to pick up on something you mentioned before, which is the spin-off of the digital assets platform, the GS DApp. What can you tell us about progress on that front, and what's the ultimate end goal there?
Yeah, so I think, philosophically, as I talked about, for us, developing the digital asset platform was all about kind of accelerating our own kind of, knowledge of this space, but we always wanted to develop marketplaces that could really kind of scale and have deep liquidity. And so for us, as we've thought about that journey, next year is when we'd like to spin that out, but there's obviously a lot of work that kind of goes into that, as you can imagine. And so we've kind of lined up with some strategic partners that are really helping us kind of develop the value kind of proposition on the platform. And as we kind of progress, we feel pretty confident that next year we'll be divesting that. So
where does the Middle East fit into the GS roadmap? Are you going to be making further inroads here?
I think as we think about kind of the projects that we're kind of developing, be it on our own digital asset platform, it's about kind of getting that scale. And if that scale, opportunity presents itself here, then absolutely we'll be looking to.